This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, August 13th, 2015. Euro dollar. So the euro has extended its correction, taking out key short-term resistance at a 111.30 to trade up towards the 112.15 area, which represents the 61.8 fib retracements off of that May high to July low move. At this point, there is risk for additional gains in this market up into the 113s, though any additional upside beyond there should be limited, with the broader downtrend still firmly intact. Look for a topside failure and lower top below 114 and ahead of the next major downside extension back below 108.10 and towards the retest of the multi-year base from March at 104.62 further down. Sterling dollar. So cable looks to retain its constructive outlook, although the market's been consolidating over the past several sessions. At this point, we need to see a break above recent resistance at 56.90, which would expose an upside extension towards a retest of that major 2015 high that we saw back on the 18th of June at 159.30. Really, only a break back below 153.50 would take the immediate pressure off the top side. Dollar yen. So a bearish outside day formation in dollar yen in Wednesday trade sets the stage for a bit of a pullback after the market stalled out above 125 ahead of that critical 125.85 multi-year high from earlier this year. At this point, we could see setbacks extend down towards 123, which guards against more critical support at 121.30 further down. Really, only a break back above Wednesday's high, which comes in at 125.28, would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss has extended its gains up towards 110, stalling out at 109.62 thus far, ahead of a necessary corrective pullback. But any setback should be now well supported by some previous resistance turn support at 106.90, ahead of an eventual upside extension towards and above 110. Aussie dollar. So Aussie has been consolidating off recent multi-year lows, 6-year lows that were set on Wednesday at 72.15, and the market could be poised for additional corrective upside to allow for some technical studies to unwind from oversold readings. However, the broader downtrend here remains firmly intact, and if we do see a break above recent highs at 74.40, any rally should be very well capped ahead of the 77 area in favor of the next lower top and bearish resumption. Really, only a close back above 77 would give reason for concern. Dollar CAD. So dollar CAD looks to be in the process of correcting following a fresh multi-year high at 132.15 a few days back, and these setbacks now could extend down towards next key support, which comes in at 128.60. Look for a break below 128.60 to open the door for a further correction into the 126 area, though a higher low is sought out with the resumption of the broader uptrend favored for an eventual break back above 132.15. Kiwi dollar. So Kiwi dollar put in a fresh multi-year low at 64.70 on Wednesday, though the market was quick to recover and has been consolidating just above 65 in the 66s right now. There is risk for a bit of a correction higher above recent highs at 67.40, though any rally should be very well capped towards the 70 area with only a break back above 70 to negate the bearish outlook. A lower top is sought out somewhere below 70 in favor of the next downside extension below 64.70 and towards next key psychological barriers at 60 further down. SPX 500. So the S&P 500 continues to slowly show signs of topping since putting in a record high back in May at 2137, though the market would need to break below that elusive March low at 2040 to confirm the top and accelerate declines. Gold. So gold is putting in a nice little correction and could be forming a bit of a base after breaking down to fresh multi-year lows in the 1070s several days back. At this point, however, we need to see a break back above the previous 2015 low at 1142 to take the immediate pressure off the downside and open the door for a more significant recovery rally. Until then, the market is looking for a lower top in favor of potentially a fresh downside extension below 1073 and towards critical psychological barriers at 1000 further down.